Dollar cost averaging has long been a very popular investment strategy in the stock market, but very few, if anybody, that I've ever heard or seen at least have thought about applying this strategy to the crypto market, and I for one think that this could well turn out to be a particularly good strategy for investing into ADA, and in this video I'm going to be showing why that is. Before we get any further, be sure to subscribe to our channel to be entered into our monthly crypto giveaways and for new content on a daily basis. So for those who are unfamiliar, dollar cost averaging is a process whereby an investor purchases a fixed amount of any particular investment asset in terms of dollar value on a regular basis. And so in practice, this may be purchasing $500 worth of S&P 500 index shares every month, or in the case of crypto, buying a fixed amount of ADA or VET or any other crypto each week or each month. And actually, this particular investment strategy has a number of benefits, and not just general benefits, but benefits which I believe to be particularly applicable to a cryptocurrency with economic characteristics like ADA. So first of all, dollar cost averaging allows the investor to begin with a very well thought out and carefully planned approach, as this strategy in any case begins with identifying an asset which the investor believes to have good long-term financial prospects, and then the investor has to decide upon an investment amount and a predetermined investment frequency, which is effectively the basis of a dollar cost averaging program. For example, I might want to invest $1,000 into ADA on the first of every month, or buy $100 worth of Coca-Cola stock every Monday. So immediately a dollar cost averaging program forces the investor to think very carefully about the asset which they want to buy, and commits them to a long-term and regular investment plan which diminishes the temptation to change frequently based upon the ever-changing opinion of the consensus. And I'm not saying that a dollar cost averaging program is definitely going to make money for any investor. I'm saying that in my view, this particular way of investing has certain characteristics which are highly beneficial, especially for new investors. While I'm a huge fan of ADA and a long-term investor, ADA is a cryptocurrency and the crypto market is very volatile and the consensus opinion does change fairly frequently. And so unfortunately it tends to be inexperienced or new investors who are most affected by the ever-changing opinion of the consensus. And this is actually a very detrimental thing to the performance of long-term investment results. You see, the reason as to why a lot of people lose money in the crypto market is mainly because of a lack of focus. Many people come into the market because they've heard the stories of others making big money and they want the same thing, which in itself isn't at all a bad thing. But most people take what I regard to be the wrong approach in that they don't concentrate their effort on a few good projects and stick to their investment plan. Instead, they jump from crypto to crypto and they never take the time out to learn the fundamentals of each project, which in my opinion is a very poor and unprofitable way to invest. By dollar cost averaging and purchasing ADA on a regular basis, I believe that an investor will be able to concentrate their efforts much more effectively and will be much more likely to stick to their investment plan than if they were to have no such plan in place. And while in theory this applies to any asset, in reality it doesn't really work that way. In some asset markets it makes no sense to use a dollar cost averaging program. For example, in real estate, because the market just doesn't work that way. If you want to buy a rental apartment or a commercial unit, you can't dollar cost average, you have to buy the whole asset or none of the asset. But in crypto and particularly ADA, I feel that a dollar cost averaging program is probably the best investment strategy for most investors. As for most investors, trying to time the market probably won't be a good idea. I mean, there are also more experienced investors who have proven to be able to time the market to some degree and that get a better overall result than if they were to just buy and hold. But those investors are usually very experienced and have a lot of knowledge and practice behind them. And so in the case of most newer investors, dollar cost averaging, if the program is followed for long enough, will even out the highs and lows of the natural price cycle. And instead of trying to pick the best entry and exit points, dollar cost averaging allows the investor to get their average purchase price as close as possible to the average price, avoiding the extreme highs and lows. And in effect, dollar cost averaging is a way of growing with the market. And in the case of ADA, I for one think that this strategy is particularly applicable because of the highly volatile nature of the market and the very good long-term prospects. Anyway, that's all for this video. Remember that I'm sharing my own thoughts and opinions and that this video is not financial advice. Thanks for watching.